Coinbase sues the SEC for sabotaging the crypto industry, and we identify how smart money has been selling the recent crypto surge. What could this mean in the short term?
Coinbase, the largest cryptocurrency exchange in the United States, has taken legal action against the Securities and Exchange Commission, SEC, and the Federal Deposit Insurance Corporation, FDIC. The lawsuit, officially filed this Thursday, June 27th, in the District Court of Washington, D.C., alleges that these institutions are attempting to paralyze the crypto asset industry through deliberate and concerted tactics. In its statement, Coinbase has indicated that its access to the internal records of both regulators to demonstrate that there is a systematic effort by these entities to exclude Bitcoin companies from the federal banking system. A Coinbase spokesperson emphasized the need for transparency, declaring that for years, financial regulators, including the SEC, the FDIC, and the Federal Reserve Board, have used all the tools at their disposal to try to paralyze the digital asset industry. We demand transparency from our federal government. Coinbase's lawsuit highlights Operation Checkpoint 2.0 as an example of the alleged pressure tactics used by regulators. This term, Operation Checkpoint 2.0, refers to a coordinated effort to make it difficult for cryptocurrency companies to access the banking system, vital for operating in the U.S. economy. The exchange argues that this ECC and the FDIC have violated transparency laws to conceal the extent of their actions against the crypto industry. The implications of this lawsuit are deeper. Coinbase hopes that the judicial process will force regulators to reveal their true intentions and strategies behind the enforcement actions they have taken against sector companies. This legal battle, which has been ongoing for more than a year, reflects the growing tension between Coinbase and the SEC. For its part, the SEC has accused Coinbase of selling unregistered securities, while Coinbase has openly criticized the regulator, stating that its goal is to destroy the cryptocurrency industry. With this lawsuit, Coinbase seeks not only to protect its interests, but also to expose what it considers regulatory overreach that could have significant repercussions for the entire crypto asset industry in the United States. The resolution of this legal conflict could crucial precedents for the future of cryptocurrency regulation in the country.
We've been observing that in recent hours, the crypto ecosystem has shown a very positive outlook. Just look at Ethereum, for example, with its very positive price trend, as well as especially Solana. It's absolutely crazy, and the same can be said about DOT. As you know, in the last video we published, we were already considering this positivity in the crypto ecosystem for the short and immediate term. It's also true that we were considering and looking for certain micro-bearish traps before taking this directional stance. And now what's important will be updating what we think of the crypto ecosystem. As in the Bitcoin chart, in its 1 hour time frame, we placed the CRIC at the price level of $62,145. We've been working on an advanced micro defense zone above this level, which the price has been reacting to very favorably. If we take a step back and gain some perspective, let's analyze this strong bearish impulse and consider the following here. We could have a W. This could be a timid poor A. And I'm starting to give you a spoiler. Let's consider the idea of an upward Z. In other words, we remain bullish on the crypto ecosystem, and now we'll explain why. But first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. If we've just told you that we're positive on Bitcoin, we're certainly positive on Ethereum as well. We're going to give great importance to this defense line we've defined at the price level of $3,361. We're looking at this market trap with positive eyes. Look at this. After working on the trap, the price came back and recovered the structure. It gave us a test. But if we zoom out a bit, let's give more importance to this macro distribution we see in Ethereum, as it's quite clear that institutions are sold in those price areas, and smart money follows its sell with a supply line. In other words, these sellers you see here protect their sell by not allowing the price to surpass this angle they're currently working on. In other words, as long as we don't see a solid breakthrough of this structure, this line, the selling force, will continue to dominate the market. We'll take another look at the matter, and what we're seeing is, hey, if Bitcoin can potentially go for a Z, why wouldn't Ethereum also join in that strong and aggressive upward excursion? It could do this very, very easily. Basically, here we have a whole price range where we place the area of the volume profile with the greatest importance between the price levels of $3,526 and $3,492 approximately. So if we say it's crucial to break through this structure, this supply line to the upside with a lot of strength, if we want to be positive in the crypto ecosystem. At the same time, we must be able to break through this volume area with great strength if we want to stop looking downward. In other words, we are analyzing from multiple different approaches, and they are all telling us exactly the same thing. And without forgetting Bitcoin Z, what can we then look for or expect in Ethereum? Well, let's look for violence and aggressiveness. This doesn't have to happen now, and frankly, it's hard to foresee how they will do it, but there has to be a strong and aggressive upward impulse. Something like the replica replica of the first impulse, but this time with much more violence. Remember that with Bitcoin, we are looking for that bullish Z. And hey, after the breakout, we would value an impulsive movement. This is our preference. It's not nice to say. And now, taking Bitcoin again, taking the bonefish, let's ask ourselves the following question. When can we dismiss this positive idea in the crypto ecosystem? Well, look, the way to follow up is through price structure. This time we will use this micro defense zone. In other words, if we see that the price ends up breaking through this structure and we lose it with solvency, then we will discard that impulsive idea of searching for the Z. Ergo, temporarily, we forget about looking up. And the way to follow up on Ethereum is also quite clear, as we have defined a supply line as I just showed you. If this supply line ends up being broken and lost, there will no longer be any argument to think that this trap is still being protected if it is lost. Therefore, all positive ideas would be discarded. Remember that at Crypto Insight, we don't think we have a crystal ball, not at all. Of course, we speculate on market directionality, as in the latest videos, we always tell you our favorite directionality, and this time, in case it isn't clear, we are bullish. But since we have no ego, we must know how to interpret at what point we might be wrong with the idea. And that is why I've shown you these limit zones in Bitcoin and Ethereum, and the analysis of Solana. Polkadot, by the way, is super key, as remember we have been speculating on this macro trap to go up and recover the macro defense zone. We even speculated at the time to look for this trap as a market limit to start rising, and we talked about looking for the trap within a trap. Look at how this idea paid off, and now the fact that we are recovering the macro structure is also important, not to mention Cardano. That said, if you like this content, don't forget to like this video, leave a comment with your opinion, subscribe to the channel, and click on the bell so YouTube will notify you of future publications. Good luck with your trading, and until next time.